What's up, guys? So today I'm going to be doing something a little bit different than what I normally do. I'm going to be analyzing a very specific stock that my friend Danny asked me to analyze. He saw my video that I made about Tesla just the other week when Elon Musk and President Trump were arguing over the internet, and the stock went way down. And I wasn't telling people what to do, but I'm saying this is what I did. I bought a couple shares of Tesla, and because of that, I've made like $100 so far. So I'm glad I did that. But anyways, let's go into the exact stock that he asked me to analyze. I'm going to share my screen, and we're going to go through what I usually do when I'm picking a stock together, so you can see the way that I think. This right here is his comment. I was talking about Tesla, and he said, do a video on Bridger Aerospace right here. I want to hear your perspective. BAER. And so I pulled up all the stuff for it. All right, so this is the S&P 500, obviously, right? And this is over the last 3 months. The S&P 500 has gone up almost 7% over the last 3 months. If we look at my retirement account, which is where I've been putting most of my stuff, over the last 3 months, mine has gone up almost 11. So I want to say this just to say, okay, like so far the decisions have been beating the market, and these are the principles that I use to make my decisions, and that's why I'm sharing this stuff with you guys. Let's look at the actual stock that he asked me to look at, right? BAER. This is what I used to do and what a lot of people probably do when they're analyzing a stock. They pull up the stock and they just look at it. Like, okay, here's the price of the stock. Let's look at what the stock was doing last week. Let's look at what it was doing the last month. Okay, 3 months. Let's look at the pattern, right? Year to date. Let's look at what it did over the last year. Okay, a lot of people, and this is what I used to do too, I would say the stock has been going down. So that means it should be going up soon. But you don't know that. We don't know that. The stock could go down indefinitely until it's at zero, and then the company can go insolvent, out of business, and then that's it, right? That's also a possibility too. So I'll look at Robinhood just to see what the company is about right here. Bridger Aerospace Group Holdings engages in the provision of aerial wildlife surveillance, relief, and suppression. The aerial firefighting services using next generation technology and environmentally friendly and sustainable firefighting methods. Its fleet includes this kind of airplane that I don't know much about, this kind of airplane that I don't know much about, Pilates PC-12. So this is the fleet of aircraft that it has. All planes that I don't know much about. I don't know much about this business model. Like, okay, is it like government subsidized? Is that how they're getting their funding? Like, I don't know. And that's my first red flag. It's like, I don't know. So I'm not going to invest. No matter how great this looks, I'm like, I don't understand the business model. So I'm not going to invest. But we'll keep going through my analytical research. Right now, just from reading this and saying, I don't really understand how this kind of company works, I wouldn't even go any further through this investment myself. But maybe you do understand firefighting, aerial, wildlife surveillance, and how this kind of business would make their money, right? So this is what I do moving forward from here. All this stuff, the price to earnings ratio, like this is important, but what's more important is understanding the business model. I head over to Yahoo Finance and we look and it's like, okay, over the last 5 years, this company's only been around for a couple of years and the stock has just gone down, right? But let's look at the financials because that's what's more important. Like, okay, we need to find out why the stock has been going down. So if we look at their financial statements, right now we're looking at their income statement. So we can see right here, see if I move me out of the way. See, this is the total revenue in 2023, and this should be in thousands, so 66 million in revenue. Then 2024, they made 98 million in revenue. So it went up by 30 million, but let's look at their net income. Net interest income. So their EBITDA right here, this is earning before interest, tax, depreciation, and amortization. Means like, okay, what are their earnings before they have to pay these taxes? And okay, net income right here from operations. So this year in 2022, they basically lost $42 million. 2023, they lost $77 million. 2024, they lost $15 million. So they're trending upward, right? We don't have the stats for 2025 yet because the year isn't over. So this is a company that is not profitable. This is a bet. This is something I don't invest in bets unless I truly understand the nature of the business and I understand what kind of debt they're taking on. Now, maybe they have all this debt because they're buying assets and they're buying aircraft, right? And I want to have a litmus test of like, okay, when companies usually do this, when other businesses that are just like this, I want to see that when companies usually spend this kind of money on this kind of stuff, it usually takes this long for them to be profitable because you want to see profits for the stock to be worth something or know that they're going to happen in the future. This would just be a big no for me. Yeah, it's cheap. It's a penny stock, but I'm not going to put a bunch of money into there hoping that it's going to go up because it's like you just don't know. Now, if you want to allocate, this is just me because of my risk tolerance. If you want to allocate like 5% or 10% of your portfolio for speculation, because that's what this is, it's like, hey, you make some gambles, you make some bets, and you make 20 or 30 different ones, hoping that one of them pans out. And then you make a lot of money from that. And then that pays for the losses of the other bets that you made and gives you a return. That's one investment strategy. It's not one I'm particularly comfortable with because I don't have the kind of capital to do that. But unfortunately, this is the kind of investment strategy that a lot of people that don't know much about the market, that also don't have capital, they do. And because of that, they end up getting losses and then they stop investing. So I don't know much about this company. I wouldn't invest in it just because I don't know much about the business model. I don't care what the stock is doing. If I don't understand the company or the business model or how they're making their money, I don't buy it. And I don't understand how they're not making money. I don't understand how they're planning on making money in the future. Hence, not buying the stock. So that is my breakdown of, what is this company's name again? Bridger Aerospace Group Holdings. Now, what I really like and what I'm really bullish on is Tesla. It's because I understand the company. A lot of people think it's a car company. It's not a car company. It's an AI company. It's an AI technology company and a robotics company that happen to be putting their AI and their robotics into cars right now. But they're also making robo-taxis, and they plan on updating their fleet of Model Ys with that. And so even as a car company, they're already profitable. And then they're building the Optimus robot, the first humanoid robot with AI in it that they already have operating in their factories, but they're going to be selling directly to consumer, directly to other businesses. I think that's supposed to be December of 2026. Don't quote me on that. Of course, it could end up being later. So I really like that company. And the key thing here is you want to make sure that this is what I like to do. And this is not investment advice, but I like to make sure that I'm investing in great companies that are already great. And when I'm buying their stock, I'm buying it at a good price. That means this company is great. It's been operating for a while. And for whatever reason, the price is lower than what it should be. And that's why I bought a bunch of Tesla stock the day that Elon Musk and President Trump were fighting, because the price lowered dramatically because of what they were fighting about. It had nothing to do with the business economics. And so it's like, okay, like the business economics are still sound. The stock is on sale right now because people got in a fight on social media and the market's going crazy about it. I'm buying a lot of this right now. And that's how I like to operate and how I like to do things. And if you want to learn more about that, how I operate and how I buy stocks, and how, even though I've only been doing this for a couple months, I am beating the market, subscribe to the channel, check out more videos. See you guys in the next one.